Welcome, everybody. Today, I'm excited to announce that we're going to be essentially teaching you guys why so many traders fail and what you can do to actually succeed in a career where 97% of attempts have failed. So, today, I want to talk about why you should stop trading blind and why you should find your edge in the markets. So, what we'll be discussing today is typical trading and what most traders do that makes them fail and why exactly that makes them fail. Additionally, we'll be discussing how you as traders can try avoiding and navigating and mitigating risks to avoid your failure. And to do that, you may have to find your edge, and finding your edge can be difficult, but I tried here to make it a bit easier for you guys to understand. And finally, we're going to talk more about order flow and the overall edge that the order flow gives as well. So let's get straight into this. So let's talk about typical trading and typical traders as well. Most typical trading strategies use simple lines or indicators. Tell me yourself, do you think the market moves if a line is touched? Or do you think a market moves because some random student developed indicator gets tapped or these two lines cross? No. And you can consider these imaginary confluences. Many traders make trades based on imaginary confluences. They say that the MACD crossed at this level and it hit this line right here, so the price will go down or the price will go up. That is all crap. You need a game plan with a defined system, and most traders, they don't have a game plan or a defined system. These traders are essentially trading blindly. They see these random confluences occur and entering into the market without really an advantage. So let's dive straight into the charts where I can show you some great examples within 5 seconds of opening up the charts. So right when I pull up the ES charts, let's see what we can find. I'm gonna pretend like I'm the typical trader and exhibit traits of a typical trader as well, so you guys understand why so many of them fail, and I just want to show you what so many people do. Let's take a look. It's hard to find failing things because you look out for good things when you have so much experience and so much time, but I'm trying my best to find something where things would have failed. Okay, so let's take a look. Okay, say you think that we're on an uptrend right here. What if you entered longs when you were at this level? What would have happened? You would have got stopped out. Say you saw this long pressure starting to occur, and then when you look at it, when you zoom in a bit, what does this look like just looking on the left hand side of the chart? Oh my god, that's a buyer flag. The price should go up again. Wrong, what happened? The price dumped once again. These chart patterns and all this, all that typically don't work. If you look at it here too, we have a double top. One top, two top, we broke this shoulder. What happened? Did we go down again? Hell no, we went up. There's so many examples where these things fail, and as a trader, you want to understand that even if you fail, the best losers are the biggest winners in trading. You have to have your systems set in place so that even if you lose once, in the long term you will succeed. If you take a look into even smaller time frames where most traders trade, you can find even more examples where these things fail miserably. So, again, right here. My god, it's a double top. We should go down to these lows. What happened? We pushed up. All of this can be avoided with finding your edge and knowing why most traders fail. You can essentially know what to do in order to succeed. So let's talk about why these typical trading patterns actually fail. It fails because the market actually moves on the relationship between buyers and sellers. Do you think a simple line could tell you the relationship between buyers or sellers? No. The market moves based on the aggressiveness of a certain market participants, and without understanding that, it's very hard to actually create successful systems. Additionally, big moves tend to happen from institutional orders. And do you think institutions are trading off simple lines, trading off simple MACD crosses or other indicator crap? They're not. They have very complex algorithms, quant, they take a look into fundamentals, they do all different types of analysis, they look at order flow, they look at all of these things because they have so much money in play and they're essentially trying to set themselves up for success, and by doing so, they set millions of other traders up for defeat. You always want to trade with the institutions instead of against. And by trading blindly, by using lines, indicators, and all of this, you are essentially trading against algorithms and institutions because they know that so many traders are going to use it and they can use that as liquidity in order to get price to move in the direction which they actually want. Additionally, even if the two match up, even if your blind trade bias and the market movement move in the same direction, your entries can get faked out very easily. Institutions and the market is very known for also faking individuals out and stopping people out right before the big move happens. This has happened to me personally tens of hundreds of maybe even thousands of times, and it's hard to go against, but you have to understand that you need a true edge to succeed. I want you guys to think of trading like gambling. In gambling, think of the game roulette. In roulette, you have a 47% chance of winning each and every time. You don't have a 50% chance. You have a 47% chance approximately. And that remaining 2 to 3% is what's called the house edge. And this is why even if many people make a lot of money in the casino, in the long term, the casino will always profit heavily. Even if it was a purely roulette casino, simply based on that 2% or 3% advantage, they would be successful. Think of trading like gambling, but now you as a trader can have the edge. You have the house edge. The market does not. I mean, the market does, but you can have the edge that makes you succeed in the long term. And to find your edge, it can honestly be very difficult. And when you have an edge, you want to define it and understand why you have an advantage that other people do not. So let's take a look into that. And before that, I want to talk about how finding your edge actually relates with avoiding failure in the market. Like I mentioned before, many typical traders fail because of these reasons that we mentioned before. They're using lines, indicators, randomly or blindly making trades using imaginary confluences. This line matches with that line matches with that. They don't actually have a true idea on what's actually going on behind the scenes, what actually it is that buyers or sellers are doing. They don't understand that institutions use many different confluences and that it's a game in the long term rather than in the short term. You need to have that edge. And you can avoid all these failures that traders make first by having a defined system. By having a defined system, you can create a system where you're essentially setting yourself up for step one for long-term success. In a casino, imagine you're a casino owner. Do you think that you will set max betting rules or minimum betting rules? Of course you will. You will set these things up in order for you to be successful and actually project your success in the long term. Casinos have specific rules and different games that are very, very smart that give themselves the edge that actually makes them succeed. By having a defined system, you can essentially set rules up in play so that you keep your psychology in check, you keep your risk in check, and you know what you're trading and the things that you're trading. Do the same thing every single time so that your success rate and your win rates stay stable or stay within a range that you would like in the long term. To avoid failure, furthermore, you need to understand that your strategy needs to take into consideration the relationship between buyers and sellers. Without this, you wouldn't know necessarily if the market is going to go up or down because you don't have an understanding on whether buyers are in control or sellers. And by understanding price action and liquidity, which is further discussed in my other videos, you can actually understand the relationship between buyers and sellers, and that could be one of the things that makes you avoid failure when 97% of traders fail. Now, you want to have a very defined edge, a very defined advantage in the market. You want to have your house edge that gives you a 2 to 3% minimum edge so that in the long term, even if you go on losing streaks, you can succeed in the long term. So, finding your edge can be a very complicated process, and honestly, your edge can honestly be anything. It can be understanding liquidity. It can be having a system that allows you to understand the movement between buyers and sellers. It can be pure price action. It can be having insights, and especially it can be order flow. This edge needs to be defined and tracked so that you're not trading based off purely lines and so that you have sustainability in the long term. For example, if you're using supply and demand, for example, you need to see how much percent of the time over a variety of times that your strategy will play out. Essentially, what is a win rate in your strategy? And you can do this by backtesting and live paper trading to understand and grasp on how this system fits with you as a person. And you can do this within TradingView. I have videos on that as well in my crash course. Now, if your system gives you probability over 50% of the time and your risk to reward on these trades are in correspondence for your profitability, everything should be good if you trade like a robot. But not everyone will trade like a robot, and that's why practice makes perfect. Screen time is very important. Screen time is also an edge in the market that many people do not have. Think about it. If you practice anything much longer than everybody else, you have much higher probability of succeeding than the other individuals. Now, since you can't trade like a robot, you need to understand that there needs to be a certain level of flexibility, but there also needs to be heavy strictness in order for you to succeed. You need to find this balance, and you need to find your own system and strategy for you to succeed when 97% of traders fail. You can't be trading blindly. You can't be over leveraging. You can't be revenge trading. You have to fall within your system, know when to stop, know when to keep going, and know when you are making money and know when you're not. Be prepared for losing streaks. This is typical for everyone, and you need to know to manage it and find ways to overcome this losing streak without navigating too far away from your strategy, which you know works in the long term. Now, let's talk about order flow. What order flow is it essentially provides you real-time data behind each and every candlestick and lets you know where money is resting on the market. This can be bookmap, footprint, the DOM, the tape, or more. Now, what I've said before ties into order flow because order flow allows you to make and understand price in real time. It allows you the sense of flexibility that many other edges don't provide. By trading using order flow, you can essentially make certain specific setups which can be unique, but if they match with what you got on the charts, they are an additional confluence that is very heavily something that can make you succeed. And that's why screen time is very important in order flow as well. In my opinion, screen time on order flow is one of the most underrated but rewarding skills in trading. I would truly recommend taking a look on Bookmap, taking a look for footprint charts, looking how to read the DOM, looking how to read the tape, and start utilizing it while you're trading to understand the true benefits of it. And I want to show you a simple chart, and this is a Bookmap chart right here. What you see on this Bookmap chart is you can see where orders are being placed, limit orders. And after long time of research, understand that these levels are either barriers or they're magnets. And by understanding this, you can use this as additional confluence within your trades as well. Furthermore, you can utilize tools such as the CVD and other tools like such alongside icebergs and stops that allow you to see in real time where other traders and where potentially institutions are placing their orders as well. That is quite an edge, if I would say so myself. It allows you to get truly an in-depth insight into the market, and without knowing that insight, it's hard to succeed unless you have another truly defined edge that has a proven track record. The con side of order flow is that it is very hard to get a specific success rate because there's a lot that can be opened up to your own interpretation, but with long enough screen time, your interpretations will typically be right because you use it as additional confluence alongside your other edges rather than just your main edge. For many traders, they use one thing as their main thing, but I would recommend that you use a multitude of confluences while staying within one specific strategy in order to reap the most rewards over time. And that concludes this video here today. I hope you guys enjoyed. Today, we not only discussed why 97% of traders fail in the markets, we also discussed why trading blindly fails, why indicators, random lines, and all of this is what is making many traders fail. And we talked about how getting an edge or getting an advantage can make you succeed and make you get the house edge like you're a casino owner. And we talked about how order flow can help you get that house edge and can be truly leveraged to succeed. Remember, order flow allows you to see what you can't see inside of candlestick charts. It gives you clues into how the market may move next, and it is truly something that other edges may not provide. That's why I recommend it. But there are many edges in the market where you can leverage and you can succeed. So I hope you learned a thing or two in this video here today, and thank you so much for watching this video. If you have any questions, please leave a comment down below or join the Discord server, which is completely free, and has many traders who are looking to learn and succeed like you and one another. That's all for this video. Thank you so much. Have a great rest of your day. Goodbye.